Hello, everyone. I hope that you guys had a wonderful weekend. And I hope that, thus far you followed my advice and, did nothing, right? As you guys can see, today the price action was not, you know, clear, clean, and well across the board, right? And that's mostly due to the fact that, and every time I, speak about things like this, these are the most important things, right? Whenever I'm talking and there's not a chart in front of me, that's the where I'm giving you the most sauce, as you would say. These are the most important topics, right? The things that you can't see, right? So, due to the fact that we had, right, no news events today, no high impact news events today, and there is none tomorrow, right? There is a less likely chance of us having, movement on Monday. So, whenever you have two consecutive days without high impact news events, for now, the high impact news event that we depend on is the US dollar, and, we'll continue depending on the US dollar for movement until the, the world changes, right? Its main currency. But for now, it's the US dollar. So tomorrow now, right, we have Tuesday, whereas we can expect something, right? But it will not be high probability. So the only reason why you should do anything at all tomorrow is if you see, you already know what you need to see, right? Sequential SMT, right? And for sequential SMT to, be of importance, for it to, for you to even be able to glean anything from it, right? For you to take it seriously, you don't need two consecutive sequential SMTs, right? You don't need that, right? You don't need a precision swing point either, right? For the easiest way, for me, is to have a higher time frame gap. And whenever you have a higher time frame gap and then you have sequential SMT within that higher time frame gap, you don't need anything else but that, right? And then that's just something else. But of course, since lately we haven't been having a lot of high time frame gaps to use, so we've have to be using our sequential SMT in stages, right? Which the first stage would be stage 2, as you guys know, and coupling that with precision swing points as well. So Wednesday, you can see that, okay, you can see that Wednesday and Thursday, right, are the days, whereas we will have the volatility enter the market. For now, we're consolidating, right? Tomorrow, we'll see what will happen tomorrow, but the days to trade will be Wednesday and Thursday, right? Those will be the days, whereas the assets will move. We will have, the low hard week forming for sure, right? Then Friday, due to the fact that Friday is the third consecutive day, whereas we have hyper news events, Friday should return back within the range of, whatever happens. Here, right, we're looking at Bitcoin versus Ethereum. You guys realize if you look in the top left corner of each chart, you'll see that we're looking at the data from the CME, right? So this is the futures data, right? The raw futures data from Bitcoin and Ethereum. This is where all of the, information in regards to, Bitcoin and Ethereum depends upon, right? So Kraken, they get their information from here. Coinbase from here, KuCoin from here, everywhere they get information from, the futures charts. So here you can see that, we traded below a swing low on Bitcoin, which was made within this gap right here, right? Of course, right? Normally, highs are the, all-time highs, or, whatever it is. They are not formed like this. And for sure, they are not symmetrical. Just as here, right here, you can see that we don't have a cracking correlation right here. None whatsoever. So we cannot, expect a reversal just yet. We need to see a correction to expect a reversal. If anyone's shorting right here, they'll get themselves hurt. Right? You don't go on short blindly, right? You wait, right? That's what you got to do. You can see that, of course, we already have a higher time frame sequence SMT, but for this higher time frame sequence SMT, which formed between the quadrennial cycle, which is comprised of 4 years, we need a lower time frame cycle sequence SMT, or a precision swing point of a higher time frame, such as the monthly, to confirm that we will be going lower. But of course, ultimately not bullish on Bitcoin, but the last time we talked about Bitcoin, we expected high prices, but that does not mean that we just expect it to be going up forever and ever. Nothing ever does that. And of course, right, we can note that we have these lows right here, right, which I know it seems crazy, but like even this drop on Ethereum right here to here, it seemed crazy as well, don't it? Right. So I have the same idea as which I've had for the past few months, right? So we're going higher for now until we see some cracking correlation here, which goes in line with the higher time frame, right? And this, we could see price consolidating for a few more months for sure. And this is due to the fact that whenever you have, high, high volatility, entering the marketplace, then you need to have consolidation before. That's where, they build up all the orders. That's where they absorb all the liquidity needed for price to reverse. Just as so, what happened here, right? We consolidated here, expanded. Consolidated here, expanded. Consolidated here, expanded. Consolidated here, and we expanded, right? Followed by a precision swing point, and we fell. So here you can see that, right? On the chart for Ethereum, right, I just turned off the wicks so you guys can see the hidden sequential SMT better, right? So this was between the quarters of the year, right? And this is the daily time frame that we're using. So here we typically see hidden sequential SMT. If I turn the wicks back on, you guys can see the wicks right here, right? But what confirmed this, right? The hidden sequential SMT right here. What confirmed it? This right here, the persistent candle, right? So right here, you can see that this candle is out of, tune. This one, right? This is an up close candle. This is a down close candle. This is a down close candle. This is an up close candle, which is where why we got this gap right here. And then we had price continuing higher, which is what we expected, right? We pointed out these sides right here, and ultimately we're expecting price to push above all-time highs again, right? Due to the fact that right now we have Bitcoin, expanding more than Ethereum, right? What usually follows this, which is what I just call lagging, right? Because the altcoins are lagging behind Bitcoin, right? So Bitcoin first shows you the move, and then you just have crazy there, whereas you see Ethereum doing 5%, 6%, or whatever, and everyone's like, Ethereum's back, right? It's just covering the ground, which Bitcoin was, already laid. The path that Bitcoin was already laid is just following what Bitcoin is doing, right? Which is what it does. It just follows up, because if Bitcoin does not follow Ethereum, Bitcoin doesn't follow anything else, right? That's why, Bitcoin is the king, and it has nothing to do with technology. That's just the way that they made, just as how, for the index future, the S&P 500 is the king, right? For the Forex market, the dollar is the king, right? Everything follows those specific asset classes. Everything within those specific asset classes follows those specific assets, right? Just as how everything in the crypto market follows Bitcoin. Right, so for now, expecting higher prices, still it's very obvious why those highs just cannot be neglected. And then here, right, you can see that we don't have sequential SMT here. We don't have any form of cracking correlation here at all, right? So this high and this high, this high and this high, you can see that this is low resistance liquidity, right? And we can expect price to just blow through those highs. After which, if we see consolidation and something similar to what happened here at the low above this high, then we can expect a reversal again. So right here, we will be, just diving into, doubling theory a bit. We won't go in all the way in due to the fact that it's the first live stream for the week. And also, I just want to get you guys acquainted with, this concept. It is similar to, sequential SMT. It is sequential SMT, but just as how you have different SMTs, you have different sequential SMTs. This sequential SMT does not fall under quarterly theory. Instead, it falls under doubling theory, right? So here we had what? And of course, doubling theory falls under quarterly theory. So it's like, yeah. So here we had sequential SMT, which formed here, which of course we saw this higher run. And then of course we saw this sequential SMT here, which we pointed out, I believe in the last video, when price was here and then we fell. Why did we have price reverse right here, right? Why did it reverse right here? There's no sequential SMT here. And here, if you're looking at the traditional sequential SMT, which just has to do with the quarterly theory, then you would see nothing. Here, right, we have price, forming the low right here, which is the low of these 2 quarters of the month, right? So again, when you're looking at the monthly cycle, you need to be using the forward time frame, right? So this low right here, it's important. Why? First of all, we had sequential SMT here, right? Whenever you have sequential SMT here, just like this, right? Then all of this price action which took place within this month, then you're going to find the lowest low, which is going to be, the main low which caused the sequential SMT. Here in the other asset class, where we had a swing low, this would be the main low, all right? Pay attention now, right? So you can see that right here, I have sell side liquidity annotated below this low and not this one, right? That's because, right, whenever you have, for example, the highs right here, right, where we had, this form a failure swing, this form, turtle soup, we're going to expect the NASDAQ to fall more than this, right? That's what we're going to expect. Why? Because there's weakness here. Just as though here, right, where we see price fail to fall below this low right here, right, which the only reason why it's that important is because it caused sequential SMT, right? So for this, we are coupling, right, 2 quarters, right? Doubling theory, 2 together, 1 plus 1, 2, right? So this just became one, right, level, right? This became, important due to the fact that we combined both of these quarters, which would make a half, right? Here, we can do this also just to represent this other half over here, right? So the thing about this is, as long as you have sequential SMT, right, it becomes a half. It doesn't matter if this sequence SMT was between Q1 here or Q2 here or Q2 here and Q3 here, right? This will become the basis of what you are looking for. So this low right here becomes important just because of this, right? In most cases, you won't need this, right? But whenever the case or the conditions are right, then that's when you use it, right? Here, you can see that we're going to do the same thing that we did here. So here, this is a half. Here, this is a half. So right here, why is this important? Okay, we had sequential SMT here, but this sequential SMT is under the rules of doubling theory, not quarterly theory, right? It's under the rules of doubling theory. Doubling theory deals with what? Mostly halves, right? Halves. Quarterly theory deals with what? Quarters. So here we traded below this pool of liquidity that we just reversed. This is the reason why this happened. This is the reason why this is important. This is the reason why we are going to expect higher prices, right? Because this happened, right? And of course, as you guys can see, the veterans that are here, the people who have been here for 10 years, 5 years, you've been in the industry. This has, nothing to do with higher time frame levels at all, right? It's just time-based, right? So, for example, right here, we had sequence SMT here, right? So where would we depend on the next double of quarters? Where? Here. So you guys can see, right? Be here. So if we see price run above this high during this combination of quarters, right? And, run above this high, fail to run above this one, then that is a cracking correlation in itself, right? So, of course, it goes deeper. Of course, there are certain time frames that, synchronize with certain cycles. Of course, we'll get to that Wednesday, whereas we, we'll dig deeper, of course. So for this, do you need a precision swing point? The thing is, right, precision swing points, they do what the name, it's pretty clear. They just bring precision, more precision, right? Ultimately, they are not needed, but for the freaks, those that, just, are paranoid, like me and myself, they need all the stars to align. That's when you use precision swing points, right? Some people, they're not afraid of taking losses. They don't care. And you can't really be afraid to take a loss if you're here, right? Because you're going to lose some of the times. You're going to be wrong some of the times, right? And that's actually, beauty, right? Just try not to fight it because, you're never going to win that fight. So yes, we can expect higher prices. This became a draw on liquidity, as soon as price traded below this low and failed to trade below this one, right? So here, yeah, we can see, the magnitude effect taking place as well, right? So here, and, highs or, all-time highs that, hold for months are not usually formed like this, right? You usually have, more of, a push above, for example, the S&P 500's highs due to the fact that it's the main high, right? And it's not usually wicks, right? And looking at the weekly time frame, right, you shouldn't see a lot of wicks, because remember, wicks are gaps, right? And gaps are not usually left unfilled, right? Even here, it's just a wick over this high right here, which is, just proof that, this drop was short term. Here, we're looking at the FX triad. We have, of course, the US dollar here, the euro here, and the Great British Pound right here. So we're trapped, right, in between liquidity pools. Here we have buy side liquidity high, sell side liquidity low, right? The same thing for the euro and the Great British Pound. I'm thinking that, we can expect the euro to push a bit higher, the Great British Pound to push a bit higher, and the dollar to fall a bit lower. Take out, this low again, due to the fact that on the higher time frame, we stated what we expected before we saw a, tremendous rise in the dollar, which we haven't seen yet, right? And what we expected was that, we expected a certain low, which would be this low right here, to be taken out with a certain, by a certain amount, which it has not been taken out by yet, which would be, this wick's length, right, which would put price around here. And we're not there yet. But ultimately, right, the drawn liquidity, still remains here and here. It's just that now we are consolidated. And also, right, as you guys know, and these are things that, we've been hinting on, we've been expecting, right? Insane, information which would affect the market on a whole, right? So we have Biden dropping out of the presidential election. What else do we have? Last week, I believe, was it last week, Friday? We had almost all major IT services down everywhere in the world, flights being grounded, all of that, insane stuff that, we only see in movies, basically, right? That's, just coming to life. So due to the fact that, all of these things are happening, that is the reason. And it's the same thing I've been saying for, like 2 months now. That's the reason why you're seeing price just being held in positions like this, right? And, we'll continue to see, price action like this, which will probably just give us 2 to 3 days a week to do something, like mostly 2 days out of the entire week to do something, right? Due to the fact that we have, this nature of price action. So it'll probably be like this until like November. And then after that, for, I'd say, the next 4 years, which is very specific, 3 years at least, we'll be having actual trending price action, right? Price action that everyone loves, price action that, as traders you need. So for now, pay attention, try to, understand price action, make use of, this type of market condition, right? Which, it will happen 4 years from now. Again, why? Because we usually have market conditions like this right before presidential elections. We usually have things like this that are happening right now, which are crazy, right before presidential elections. What are they distracting us from? You tell me. Hope that you found this useful. We will be back day after tomorrow, 6 p.m. Eastern Standard Time. Right. Hopefully then we will have, something, more concrete to work with. Hope that you found this useful. I hope that you have a wonderful day, rest of today, tomorrow, and we will be back. Good luck and good trading.